your key is your Bitcoin. You don't send the Bitcoin to anybody else. And because you maintain custody, whether you're retail or an institution, you maintain custody, it's safer. For example, with bridges, they're notorious for getting hacked, and it's very hard to secure a bridge against every single threat all the time. But if you maintain self custody and you don't send it anywhere, you just lock it using some mechanism, that's just going to scale a lot better and be a lot safer.
None of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by WAGMI Ventures or any of its affiliates to buy or sell any securities. Hey WAGMI family, Benga here with another WAGMI Ventures podcast episode. Today we're going to be chatting with one of the OGs in the exploding Bitcoin DeFi, or should I say Bitcoin Fi space, Balogh. He is the CEO, co-founder of iBTC, a project that harnesses the power of discrete log contracts to establish a truly trustless bridge between Bitcoin, Ethereum, and other chains. For anyone who is new, this is the WAGMI Ventures podcast, where we do snapshots with interesting builders and founders across crypto and AI. Check out wagmiventures.io to learn more about the syndicate behind the podcast. Let's get into it with Aki. Hey, dude, welcome to the show.
Hey, thanks for having me.
Yeah, thanks for being here, man. I'd like to start with you sharing your crypto journey with our listeners.
Yeah, definitely. So just for context, I've been a developer for 30 years. I was a VC in Boston in 2011, looking at big data, distributed data, AI, machine learning. I actually heard about Bitcoin in 2011, but regrettably, I didn't focus on it then. I was busy because I started an AI company and I ended up raising venture for it. I raised 15 million over 7 years. I built that company out. Basically, I invented a way to use AI, or rather machine learning, to optimize content for search. And that became the predominant way to optimize articles for SEO in the publishing and content industry. So this company, Market Muse, anyway, I built it for so many years, yada, yada. It ended up getting sold a few weeks ago. So that's like my first chapter of my life. But basically, 7 years in, I'm like, hey, this was an interesting ride, but I want to build another product. I wanted to build it in a bigger industry. I want to build something that helps society. And so I came over to crypto in 2021 full time. I put a CEO in to run Market Muse at the time. And I came over and I just was looking for where could I build something, maybe something that uses an invention from academia. I like to take things from academia because there's a lot of great science that's done, but then turning that into a product and launching, it's always been very interesting. And so I'm not a cryptographer, of course, I've never been, but I learned about this invention called discrete log contracts that was created 6 years ago at MIT by the creator of the Lightning Network, Taj, who used to teach the Bitcoin course at MIT. And I noticed that there were a couple of teams like building on DLCs, but I noticed that basically we didn't really find, like at that time, we didn't really have product market fit for DLCs. It was sort of this like obscure Bitcoin tech. And anyway, late 2021, I started DLC Link, which was originally a partnership with Chainlink. So Chainlink was our first investor via grant. So basically, I started DLC Link to connect DLCs to DeFi on ETH. And yeah, fast forward to today, we've got DLC BTC, which is a safer wrap Bitcoin.
That's all very fascinating. And thank you for that background. It's sort of refreshing anytime you hear founders who are second-time or third-time founders. So it looks like you've had a strong entrepreneurial journey that is taking you into crypto now. Would love to hear your thoughts, more especially on the Bitcoin Fi emerging landscape and vertical, and perhaps any notable differences between institutions and retail.
Yeah, those are two really big, interesting topics. So when we came to this space in 2021, I mean, I can just tell you my impressions, it was very new and very ideologically driven. So on one hand, you have, for example, the DLC companies, Atomic Finance, Shell Finance, a couple more, 1010 Wallet. These were these brilliant Bitcoin developers, but generally speaking, they did not want to touch Ethereum. Like Ethereum was like a dirty word for them. And I met others kind of in the Bitcoin camp, of course, the maxis at the time, who were just, as soon as you mentioned ETH, it was like, go away. So that was not super helpful. And then actually we spent a year at Stacks. So working with Stacks, RSK, those I would say were the early thinkers and the early community around, hey, we got this Bitcoin. It's a great asset. It's an amazing asset, but let's do something with it. Maybe let's take a loan or earn a yield or invest it somehow. Let's not just let it sit there. And so early on, Stacks actually got, I think, a lot of flack from the maxis and so on. So it's very much like a polarized, kind of an uncomfortable atmosphere, to be honest. And then that started changing in 2022, luckily. And in 2023, we started getting like this whole Bitcoin Fi where just now we see so many Bitcoin L2s. Someone said there's over 400 Bitcoin L2s and everyone's trying to build on Bitcoin. And what can we do using Bitcoin as an asset? And what can we build into Bitcoin? And what are some future things like BitVM? So the space really exploded, which is really great. And then you mentioned on the institutional side, well, then the Bitcoin spot ETFs came in, which of course the US has traditionally been the laggard. But when the spot ETFs were approved and all this capital started flowing in, that also started showing up on Wall Street and been the perception of kind of the average American. So on one hand, you've got all this super cool, interesting DeFi building, which a lot of it happens in Asia is what I'm seeing. I'm in New York, so a lot of the best projects we see coming out of Singapore and Hong Kong. The regulatory environment there helps too. But anyway, you've got all this really interesting building and people looping assets and stuff. And then you've also have now mainstream adoption within institutions, hedge funds in the US in an SEC compliant way. So it's growing in different ways, in different directions, and for different audiences. But it's come a long way in 3 years.
Yeah, no, that's fascinating. It's an area where, you're seeing all the other chains have more DeFi use cases and activities. So definitely welcoming to see folks beginning to think of more DeFi action on BTC and helping that evolve and grow in a mature and a safe way, which kind of brings me to a lot of the conversation around how Bitcoin really transitions into this DeFi product. And one of the ways we've seen is by wrapping Bitcoin, right? Can you talk about what wrap Bitcoin means, what the DLC piece of it is, and how that's all translating into Bitcoin staking?
Yeah, let me break that down. We call DLC BTC a safer wrap Bitcoin. So let me explain both sides of that.
Yeah.
So wrapping Bitcoin is just sort of the category of using Bitcoin on another blockchain. And so this category was invented with BitGo, Kyber, and Ren, like 3 companies working together about 4 years ago. And the thought was, hey, why don't you take Bitcoin, put it into BitGo's custody? They'll give you an Ethereum and ERC20 token, and you can use that in DeFi, take loans against it, and so on. And that was very successful. It took a while to kick in, apparently. It took maybe a year for it to catch on, but then it quickly grew to over $10 billion in total value locked and just became the first way, essentially, to use the first mainstream way to use Bitcoin in DeFi to earn a yield. And that was a really good start. That was V1 and the genesis of that. But it left, there was sort of always like this, I've called it a design flaw, but it's really just a shortcut they took where, basically if you own Bitcoin, you care about self-custody, you care about decentralization. But in the WBTC model, you start by sending your Bitcoin to BitGo. So you have to onboard to BitGo. They're a US entity. You have to send your Bitcoin to BitGo and they hold it in a centralized location. So basically you're taking the most decentralized asset, sending it to one centralized location to use in decentralized finance. That dynamic never made sense. So then over the years, another kind of trend emerged, bridging. So basically, and TBTC Threshold, they've really pioneered this. I think they have the best, or arguably the best, Bitcoin bridging product, where basically you take your Bitcoin and you send it to a collection of nodes. I think they have 60 nodes that custody Bitcoin, and they just hold it and in their custody. And then they mint TBTC, which is an ERC20 that you can use in DeFi. and it's a bridge system. And then they have all sorts of guardians and failovers. And if something fails, they have backup systems and whatever. And it's very complex. It's an amazing piece of engineering. It's very complicated. They have, I think, over 50 or 100 tunable parameters. It's pretty wild. And that's grown. That launched, I think, about 2 years ago. And that's grown quite well. I think there are, I don't know, around 300 million TVL or something, maybe more. So they've done really well. But the problem there is still the safety aspect. Now you're not sending it to one custodian, you're sending it to 60 nodes. But still the problem remains. If you have Bitcoin, you're holding it as a store of value. You're relying on the mining network to secure it. 60 nodes is not Bitcoin, it's TBTC network. So you've delegated your security to TBTC. And of course, it's just you've lost security along the way. So that was sort of the second gen, which is great, already better than first gen. So anyway, now you have a third kind of generation, which we are a part of, where you self-custody. And I would put us in this. Of course, Babylon has a form of self-custody. CoreDAO has a form of self-custody. So it's the latest. BitLayer, which is a Bitcoin L2 working on BitVM, that promises the ability to have self-custody. And so basically, it's like your key is your Bitcoin. You don't send the Bitcoin to anybody else. And because you maintain custody, whether you're retail or an institution, you maintain custody, it's safer. So for example, with bridges, they're notorious for getting hacked. And it's very hard to secure a bridge against every single threat all the time. But if you maintain self-custody and you don't send it anywhere, you just lock it using some mechanism, that's just going to scale a lot better and be a lot safer. And that's where DLCs come in. DLCs are a mechanism to enable self-custody, basically locking Bitcoin in self-custody. And that's what we use with DLCBTC. So DLCBTC is minted by locking Bitcoin with yourself.
Interesting. Yeah, you actually touched on one of the questions I was just thinking about, which is the concern around the security on bridging, why your wrap version of Bitcoin is safer than the other options out there. So I guess the underlying DLC technology is sort of what's driving that. But then you then take that forward with BTC staking. And I think you touched on it, but I just wanted you to highlight how your approach is different from how other projects are solving Bitcoin staking. There is the self-custodial piece where you're minting it, but are there any other unique differences?
Yeah. So as a company, our first priority is to launch DLCBTC as a wrap Bitcoin, get it on different chains, get it into DEXs and lending protocols and places where people can use it. We've done that over the last few months. We've made a lot of progress. And actually, there's some stuff that hasn't been announced yet, but I can at least tease it. So you're going to get some alpha on this show, which is always great. So I'll even take a step back. So a few months ago, we launched DLCBTC on Arbitrum. It's the first native wrap Bitcoin on Arbitrum chain. Previously, you have bridged TBTC and bridged custody WBTC. Now you have a more native minted option. We also launched a partnership with Chainlink Proof of Reserve. So we have a set of relay nodes that cannot take custody of Bitcoin, but they relay a signal. That relay signal is checked by Chainlink's distributed Oracle network, just as another backstop. So anyway, there's a couple of other kind of things we launched, but partnering with Chainlink, we then went from Arbitrum to Base to ETH to OP to Polygon. So we've just been kind of following along in that Chainlink ecosystem, and we're partnering with other bridges now too to go onto other chains that Chainlink doesn't yet support. So that's just sort of like getting DLCBTC out into the wild. And then the alpha that I can share is we're partnering with a very large institution that's going to mint a significant amount of DLCBTC, hopefully over the next few weeks. We've really been partnering with some leading custodians and leading players, and you all should see that happen hopefully in November. Our goal would be to get it done in November, but heck, if it's Q4, we get it done in December, also fine. So that's going to fund a lot of the liquidity and lending pools and things so that you can start using DLCBTC. So that's step one. Then it's sort of like, well, what kind of DeFi do people want to use? So with Wrap Bitcoin in general, you can do loans. So you can borrow, let's say, stables and invest. You could borrow stables against WBTC, let's say, and invest it. You can borrow ETH against Wrap Bitcoin and stake it. So those are two common use cases we'll have for DLCBTC as well. You can do on-chain options. So we have a partnership with Jasper Vault for options. But all of those things are like a little complicated. To do options, you have to, well, ideally, you have to be an options trader. And so what's a really easy way for people to benefit from holding crypto? Well, it's staking. On ETH, you've got EigenLayer, you've got staking, you've got restaking, you've got a whole ecosystem. And so I guess about a year ago, Babylon especially started exploring the Bitcoin staking world, and they've really built out a lot of tech. They're using Bitcoin to secure Cosmos chains. So there's some cool stuff, and they've launched some pre-rounds or pre-seasons, and they've gotten a very good uptake. I think something like $1 billion of Bitcoin has been secured into Babylon. So that's really great. But of course, that's securing Cosmos chains. So I think the yields are going to be, we're not quite sure what the yields are going to be, but I think they're going to be more on the lower side through that approach. And so for us, now that we're rolling DLCBTC out, we're starting to work on our second product, which we're just calling it one-click yield, but it's basically native Bitcoin staking to secure EVM chains. So it's the ability for anyone to stake Bitcoin to secure proof of stake chains through partners like Symbiotic, Karak, EigenLayer, just that whole emerging ecosystem of restaking platforms on EVM. And so that's for us, that's going to be the next logical step after building what we call a better Wrap Bitcoin, a safer Wrap Bitcoin. We're going to build a more composable, more extensible Bitcoin staking platform.
Yeah, I love it. Hey, everybody. Quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Let's get back to the show. I love the fact that you use that word composable, because I think that's one of all your key differentiators. I want to actually do a deep dive and just let you talk more about what composability means and how it really separates you from the other Bitcoin solutions out there.
Yeah, let me maybe take a step back, or maybe even two steps back, and explain the why behind our strategy. So I've been in software for a long time. I guess I was trying to count. It's been a while. Even when I was in VC 13, 14 years ago, we always looked for businesses that can scale. And how do you scale better? Well, when you partner. And that's a big part of Web3, of course, is WAGMI. We're partnering, communities, interactive Discord, podcasts. Like, it's all about partnering, because I might be really good at one thing, you're really good at another thing. And it takes a village to build out complex software versus traditional finance, where maybe JP Morgan Bank, they have a bunch of software engineers, they build everything in-house, but that's going to be a lot slower, less interesting, more brittle, etc., more expensive. So core to DeFi, for me, the biggest part of DeFi is composability, partnering, working together. And so this is particularly important with BTC5, because obviously Bitcoin is not very composable. It's not interactive with it's just really hard to build on. Our advisor, Christian Catalini, who's at Lightspark, and he co-founded Libra, the coin at Bitcoin at Facebook years ago. But anyway, Christian Catalini likes to say building on Bitcoin is 50 times harder than on other chains. And that's absolutely the case. So for BTC-Fi, and we've seen this over the years, there's a real danger in building something that's very hard, very complicated, and then doesn't end up being interoperable with other things out there. And my view from early on, even before the Bitcoin L2 explosion and before all of this, my view was whatever we build, it has to work with other components. It has to serve the customer. And who are our customers? Our customers are traders, whether they're retail traders or they're professional traders at institutions. It's the traders that are doing the moving a lot of the volume, and they're doing a lot of the complicated stuff. And so we're trading ops infrastructure. And even though it's on Bitcoin, it has to be, and so there's going to be some custom stuff because of the fact that it's on Bitcoin, but it has to be as interoperable as possible, period. And that's composability. So, for example, I mentioned we partnered with Chainlink early on. We partnered with Gauntlet. We partnered with Chain Analysis. We partnered with the Arbitrum Foundation. I mean, these are all like standard. We're partnering with BitGo, with Fireblocks, Anchorage, et cetera. These are all off-the-shelf solutions that like the components are there. We don't need to rebuild this stuff. Let's just combine the components in a way that delivers value to our customer. And so all of that is composability. And so our goal as a company has always been to let's build the one thing that we're really good at, which is the DLC locking mechanism and all the aspects of that. And let's plug into existing systems. So for example, our Bitcoin staking solution plugs into Symbiotic, Karak, and EigenLayer. All of those restaking platforms now support the ability for any ERC20 to be restaked and to be used to secure proof of stake chains in any AVS and so on. So basically, it's all of that is just, it's a faster, easier way to build Bitcoin staking software. And so that's what we're looking to unlock with one-click yield. The only aspect of one-click yield that everybody sees or focuses on is it's one click. All we want is the UX to be so simple that you connect your Bitcoin wallet, you pick a strategy, like let's say Symbiotic XYZ Vault, and it pays whatever percent. You pick that strategy, you click stake, and you stake your Bitcoin to it. And then that generates yield. From the user's perspective, that's the only thing they want to see. They want to have earned protocols that generate yield. Now, on the back end, when the user stakes Bitcoin, it mints the LCBTC, which then goes into the LRT and the other. There's a lot of complexity, but we want to abstract away to provide a good customer experience for our users.
Yeah, that's great. I think when we look at the many ways we try to get folks to onboard to Web3, you're touching on the two keys, which is the composability or interoperability that comes with it, as well as the user experience. And so I definitely see a lot of promise with the one-click staking, and congrats on that solid initiative.
Yeah, thank you. It's just for us, it's a natural next step after, okay, we've created the wrap Bitcoin. We can now move Bitcoin value to EVM. And by the way, we can wrap Bitcoin to other chains too. There are non-EVM chains that we're going to be launching on. I'm not allowed to say yet, but there's one that you've definitely heard of that's almost live. Their PR team has yet to announce it. So there's a really big one we're about to launch definitely in November at some point. There's another huge one that we're going to plug into this year that's moving like $3 trillion of RWAs every month for institutions. That's another one. So like we can wrap Bitcoin to any chain with this technology, but it's just for us, it's just about making it easy, simple, and safe. And then it's just serving the customer need. If we meet a protocol or we meet a chain and they want to run a campaign and let's get Bitcoin to this location, it should be very easy to do that. And I think there's just with Bitcoin Fi, sometimes people fall in love with building new tech for the sake of tech. And that could be a fallacy because then they can spend a lot of money building something that ultimately doesn't really get used, which is always a shame when that happens.
Yeah, that's very true. But clearly, you guys have been very busy. A lot of huge initiatives, huge projects. I know many of it you can't announce just yet, but I think we could talk about some of the partnerships that you already have. So Karak, Symbiotic. I think there's another one upcoming. I'm not sure if I'm okay.
Eigenlayers.
All right, I can say it. All right, I will say it. Eigen.
Oh yeah, yeah. It's actually Eigen's cool because they've implemented it in a permissionless way. So any ERC20, we haven't, to be fair, we haven't plugged this in yet, but it should be easy because it's composable. Any ERC20 can be used to, or they can use ERC20s to secure proof of stake chains, and they allow AVSs to accept any ERC20 as a restaking asset, and that's really cool. And like that, the fact that like Eigen did that, and not a lot of people know that yet, but it's on their website. That's really cool. That's like the speed of composability, because instead of picking one use case and just driving a lot of marketing and saying this is going to be the one thing that people are going to do, and we're all going to secure these Cosmos chains and get these random Cosmos tokens, instead of like making a big push like that, it's we're just letting the industry just follow its natural evolution, which is, hey, you know what? By and large, we like building on ETH. We like building on EVM. We like Eigen and we like all these different platforms. Let's use them. And by the way, when you have a new chain like Solana, guess what they're going to build next? Probably something similar. So it's really cool to just plug into this evolving story and just see everybody working together as a team versus just kind of people going off on their own and launching a new L1, which usually, in my view, almost always doesn't work out so well.
Yeah, certainly seen examples of that. Okay, so with minting from self-custody staking on DLC BTC, you mentioned restaking earlier. Can you share your thoughts on what the future plans or what the initiatives are for LRTs and LSTs on your platform?
Yeah, this is where we see a lot of the dichotomy between institutions and retail, and to some extent West and East. So in the West, and also the legal structures here are much more restrictive. Over here, it's pretty much show me the yield. Points don't matter as much. I mean, institutions generally cannot have points on their books. They can't value them. They can't necessarily receive securities. So if there's an airdrop, that might be a problem for them. Obviously, if they incorporate offshore, that's not an issue, but in the US, it would be a problem. So you have institutions that are looking to just basically doing like very standard, very simple vanilla stuff like, hey, can I do a call option or a covered call on my Bitcoin, earn 5%? We're partnering with Hashnode. They have a Hashnode Harbor product that does, I think, 5% on Bitcoin, and it's regulated and it's super straightforward and it's very easy to subscribe to. So that's on the institutional side. And then on the retail side, you just see this explosion of points and points looping into other points. And it's really fascinating. You can take, like in Lombard, you can take LBTC and put it into EtherFi eBTC, and there you're earning like 5 types of points. Well, you have to send your Bitcoin to Lombard. So you have to bridge it. It's a custodial bridge. So you lose custody. But if you give custody to Lombard and they give you LBTC and you can loop it, that's awesome. That's really interesting. You see 5 different types of points. People love speculating, see what the points are worth. And there's a whole game. And it's really just, it's a very emerging, like, how do I milk my Bitcoin value for all that it's worth? And of course, along the way, I take several risks, but maybe if I'm okay with the risks, then that's fine. So yeah, I just see these two worlds evolving quite drastically. I think what I'm really focused on, just given my background in enterprise sales, are how do we unlock the very big pockets of Bitcoin? So I saw a study that something like 75% of hedge funds in America own Bitcoin, either directly or more likely through exposure to the ETFs. Well, how can we put yield on those ETFs? And can we put yield through DeFi? And if so, that would unlock hundreds of billions of dollars of value into DeFi. And, if you imagine making just a measly 5% on 500 billion, it's a big number. So that's what we're really focused on, is building things that scale really well. And then on the other side, we have an appreciation for and keep an eye out for these retail mechanisms where it's much more like a casino, but it's very fast moving and very exciting.
Yeah, no doubt. It's very exciting. And even just looking at it from a macroeconomic view, as we start to see interest rates drop, the US and certainly other countries, Western countries, there is going to be a flight to DeFi. And so the innovation there and the opportunity there to generate more yield becomes even more stronger. So it's going to be exciting how it all plays out in 2025. Don't want to go down that road too much. I want to bring us back to the broader crypto sphere. We've talked a lot about the Bitcoin piece and your solutioning in Bitcoin, but there are other players focused on other chains outside Bitcoin, like Eigenlayer, which you talked about earlier, Solaire, who've sort of focused on the Solana piece. In terms of like approach, I know this is apples to orange comparison. Can you still give us some sort of parallel in your solution versus these other guys?
Yeah, we plug into, I mean, our goal is to plug into all of them. Our goal is to plug into every chain. I actually just had a conversation with Arthur Hayes last night, which was a real honor. And well, there's one thing everyone can agree on. It's that Arthur Hayes is awesome.
Yeah.
I think everyone would agree to that. But yeah, our goal is to make Bitcoin safer and easier to use in DeFi for retail and institutions, and to launch on every chain, and to anywhere where there's DeFi, where someone might want to use their Bitcoin in DeFi, including the Solana ecosystem, including the Move ecosystem, etc. Just to have Bitcoin in all these places. Our technology, unlike other Bitcoin wrapping techniques, our technology works really well. It's very easy for us to launch on a new chain because we don't have a bridge. We don't have to rebuild anything on different chains. We just deploy a mint and burn contract, and pretty much we're there. It could be theoretically done in like a couple hours, although usually it takes about a week to get everything aligned and get the multi-sig signed. But anyway, let's say we can deploy to a new chain in a week. So as we grow, we definitely want to move fast and be broadly available. So that's on our roadmap. A lot of work to be done. There's a lot of chains. We're tracking about 50 right now. So there's a lot of work there, but just making it available is a big deal. And so through that, you mentioned Solaire. I just learned about them today, but amazing. I mean, all these chains are going to have builders who want to do really interesting things. Bitcoin, of course, is the store of value, is the gold standard when it comes to security. So I think there's just a lot of, and of course, Bitcoin holders are always looking for new sources of yield, and you're more likely to find a new source of yield on a brand new chain than an existing chain. So there's always going to be this evolving picture, and we want to be that safest way to bring the Bitcoin value into these chains.
Makes sense. And just on the chains and following up on everything you just shared there, you're seeing a lot of scaling solutions on Ethereum, the L2s. You're seeing a similar theme playing out in Bitcoin with the Bitcoin L2 ecosystem. I mean, you talked about it earlier in our chat. There's like over 400 Bitcoin L2s out there. Any unique needs of these L2s relative to base layer, or it doesn't really matter? You're just really focused on the 50 that may or may not be Bitcoin L2s.
Yeah, this space, it's exciting and a little bit controversial. So there are, I would say, I don't know, I'm not the de facto decider of these. I would say there are maybe like 10 Bitcoin L2s that I've seen that seem to be quite legitimate in many ways and very strong. And then there's a lot of them that they just keep popping up, and some of them have wild claims and so on. So it's definitely an emerging space, and maybe that ratio is completely normal for something new. But what I love to see is when a Bitcoin L2 invests into research and development. For example, BitLayer recently raised a lot of money because they're focusing on BitVM. And BitVM is a cool tech, and I really hope they deliver it and it works for everyone, and it works out really well. So BitLayer has, I think, a research-based technological advantage to the extent that they can deliver what they promised. So I track them. I was like hearing about them. But then you have a whole bunch of Bitcoin L2s that are like loosely defined as the quote unquote culture of Bitcoin. But that's a bit more problematic because these chains are not L2s. They are side chains. So they have branded themselves as affiliated with Bitcoin when really they pretty much have very little in common with Bitcoin. The thing that's most, I don't know, one of the core value props of Bitcoin is the safety, the security of Bitcoin and the mining network. And if you have to bridge your asset into a side chain and you have to send your Bitcoin to another, to an unknown set of holders or bridges or nodes that custody it, you're really just reliant on that founding team and their security practices and the engineers there. It just seems really risky and it seems completely not Bitcoin-y. So I do have an issue with the culture of Bitcoin if someone's being sold something that is said to be an L2, but is really just a side chain. For example, in this regard, Bob, building on Bitcoin chain, stands out because they have said, we're not an L2, we are a side chain. We are EVM compatible side chain, and we like Bitcoin and we want to build Bitcoin capabilities. I respect that because they're very upfront. But I would say for anyone, just be careful where you bridge your Bitcoin. Bridging is notoriously unsafe. And so there's always a risk of a complete loss if someone sends their Bitcoin on any kind of bridge technology. That's just always going to be the case. I didn't make that up. That's just how it is how it will always be. So for the Bitcoin L2s, I would say like 10% seem very exciting, and maybe some percent, 40, 50% are very questionable.
Yeah, that's pretty high percentage. Hopefully, fingers crossed, the folks are doing their research. Okay, I want to hear more about your roadmap and your vision going into 2025. I think the audience would be really excited to hear some of the new initiatives you're working on. You shared teasers here and there earlier, but let's talk concretely about what we should be expecting from you guys next year.
Yeah, I'll even start off with this year. We're very excited. After literally 6 months of hard work, we're excited to onboard our first set of very large institutions that are going to be minting DLCBTC. It's really great. It's not done till it's done. When it happens, you'll see it on DeFi Llama and you'll hear about it in the news, hopefully. But you should see our TVL soar because we've been in this kind of institutional onboarding process for a long time. It's a much slower start than we'd like. So we're excited to finally get over that hump. And we've got a very good partner that I'll be extremely excited to announce once the deal's all done and the minting has happened. So having this big sponsor on board is the priority for Q4. Then that's going to create a lot of liquidity or bring a lot of liquidity into Arbitrum, ETH, these chains that we're on. Then that's going to finally unlock. We're part of the way through an Aave listing process, so that should unlock the rest of it. And then some of that liquidity, or a lot of it, can go into the Symbiotic Carax of the world or their ABSs. So we're excited to get that there. That's going to create enough swap liquidity for people to start using DLCBTC on a more regular basis. So that's going to offer a more technologically advantageous replacement to WBTC and to other wrapped Bitcoins that kind of came from that legacy batch. So that's really interesting. And then we're just going to we want to build what our customers need, and we serve traders. So the traders take loans. They do options. They do different types of, they're on perp dexes. So we just want to launch on all of the major venues and just have Bitcoin DLCBTC represented there. And then I think next year also staking will be a big narrative. To bring up a new topic, because I've been talking about staking for a while, I can also bring up gaming. So we've talked to gaming providers like the Telegram Ton network and the Doodle's going to move, I think it's called Flow ecosystem and others, where they want to build games where you can earn Bitcoin rewards or you can use Bitcoin in a game. That'd be really cool. So DLCBTC can be used there. It can be used in the real world assets narrative. It partners with stable coins in various ways. So just any major development of crypto, we want to be there and have native wrapped Bitcoin represented there.
Yeah, that's great. I mean, we'll be looking forward to what you have in store for the rest of this year and obviously for next year as well. I know we've talked about it privately, so super exciting. I'm pumped and can't wait for you to announce it once everything is ready to go.
Oh, and I would be completely remiss if I didn't tease that we are launching at some point. The DLC Foundation is looking to launch a DLC token next year, which is basically we have an Oracle network we call a tester network, and securing that network, decentralizing it, and enabling testers and retail who buy the token and delegate to testers to earn a share of the revenues from the Bitcoin that's bridged. There's a revenue mechanic model built into that DLC token. So we're excited to announce more about that next year. And if we do our job right, you all should hear about it, hopefully in a couple months.
Yeah, no, it already sounds one to look out for. I mean, especially from the foundation perspective. Yeah, fingers crossed, looking forward to it. And before we end here today, obviously you and I can go on forever. We'd like to know, like, what else in crypto excites you outside of the staking and restaking narrative?
It's such a wild space. I love my like little joy moments are when I hear people make projections about things. Just being a technologist and a builder for quite some time, I love it when people say, oh, so and so, that's 6 months out, or this and this, that's 5 years out, 5 to 10 years. It's if something is almost ready, you say 6 months, and if something's like in the distant future, it's 5 to 10 years. The truth is, we don't know what's going to happen. And that's the magic of crypto. It's been such a wild ride. I mean, I cannot claim to be an OG. As I mentioned, I got in full time 3 years ago. So, but it's such a wild ride. Right now, obviously, there's like, we know what's a topic now, meme coins and the election. And let's see where it goes, because what we're building, it really, and I truly believe it's going to make a huge impact on traditional finance. Things are already running on crypto rails in other countries. I think they're going to run on crypto rails in the US more and more. We're going to see more kind of international trade and money transfers and so on being carried out using Web3 and blockchain. And then we're going to see a lot of financial product innovation. I think that's why the traders are excited, is you can really get very specific and create better products. And that's why, I guess, to take it back to the very beginning, when I was a VC in 2011, looking at big data, Hadoop, large-scale data management systems, it's not the systems themselves. The system, like, who gets excited about a database? Almost nobody. They're very obscure. But it's what they enable. It's AI. I mean, you had Hadoop, then you had Spark. I don't know if anyone in the audience even knows what these things are, but you had distributed data, you had columnar databases, then you had Hadoop, you had Spark, you had different NoSQL. And then you had AI, which kind of came out of a lot of that. So the LLMs, the ChatGPT we use today, would not have been possible without the NoSQL data explosion back in 2010, 2011. And I think that's where crypto is. We don't know exactly what we're building yet. Maybe we're building AI for supply chain optimization, or maybe we've already built money that makes money by itself. Like when you hold USDC and it makes 5%, that's amazing. So just having money that makes more money is magical. Like, I'm really excited to see what the future holds. I don't think I see more than a few months out in this space. And yeah, I'm psyched. But one thing I know, Bitcoin will be there, and so will we.
Yeah, no, that's for sure. And I think it's finally Bitcoin's time to really shine on the DeFi side. And knowing that you're part of those in the forefront of it is just really comforting, because you've done a great job through your entrepreneurial journey building pretty solid products. I want to thank you for being on the show today, Aki. Obviously, we're going to be watching closely to see what you guys announce before the end of the year, and of course, what you guys do next year. And we'll continue to root for your project. Thanks.
Thanks so much. It's been a pleasure. And thank you, everyone who listened. If you need to reach out, dlcbtc.com. I'm at Aki Balogh on Twitter. And we've got a Discord. And bring your questions. Always love to hear from you.
Awesome. Thanks, man. Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and give us a good 5-star rating. And subscribe wherever you're getting your podcasts so you can get all the latest conversations from the most interesting founders, builders, and investors from across the world. Thanks so much, and have a good one.